Welcome back to another Stock Market Open live stream. Today is a PPI day. That is, we get the producer price inflation report. We don't really expect too terribly much out of this, honestly. But then again, we didn't expect too terribly much out of CPI, and it came in a smidge hotter than expected, probably driving the Federal Reserve towards 25, and then maybe some dovishness in the statements. Obviously, anything could happen here with PPI, but it seems unlikely that we're going to have anything wild. But who knows? Same thing as yesterday, Sometimes when the expectation is so low, it's kind of easy to disappoint. So we'll see. All right, so what do we got? We're about 2 minutes away. And what else do we have today at today at 6 p.m. today we have the flash sale expiring 6 p.m. flash sale. There we go. Okay, we'll throw that on in, and there we go. Okay, cool. So PP Izzles. Let's go look at the expectations. Oh, wow, those are low. Expectations. See, every time they come in with these low expectations, it's always a little nerve-wracking because it's like, okay, we could screw those up. Well, we got PPI survey at, what do we got? 0.1 month over month. Core 0.2. Core less trade 0.2. Then on the year-over-year, we have 1.7, and the year-over-year food energy, we have 2.4x of those things. So let's see what we get. About a minute to go. Then let's see here. ECB did cut this morning. I did see some notes come through on the ECB. I thought their inflation forecast was interesting. They have... where was it? Here it is. Expectations for inflation forecast 2.5 in 2024, 2.2 in 2025, 1.9 in 2026. Core 26 they think will end up being 2%. They did end up cutting 0.25. Everything's broadly as expected. And let's see here. Inflation's declining the way they would expect. Still expect to keep the policy rate sufficiently restrictive for some time to finish the job, so to speak. Okay. All right. Let's see here. Just hope they don't overdo it. If they don't overdo it, they're going to have little statues in people's front yards. All right. So... okay, there it is. Oh, of course, it all comes in like 0.1 hotter. So this is what happens again when you have low expectations. 0.1 hotter on month over month, 0.1 hotter on month over month core X food energy, 0.1 hotter X food energy trade. Each of those come in 0.1 hotter. That's not great. Then you've got year over year number bang on 1.7, year over year. X food energy comes in 2.4. Initial jobless claims come in a smidge higher at 230 versus the expectation of 226 with a 1,000 additional revision. Continuing claims the same at 1850 as expected with a 7K revision up on the what are they called? A 7K revision up on the prior continuing claims. This is probably going to drive yields up here, since you do very clearly have a beat here across the board. Oh, but you do have revisions. Oh, interesting. Now that's gonna all right. Well, now you have the prior that was actually revised from 0.1 to 0, and the prior X food and energy was revised from 0 to negative 0.2. So that's a little odd on PPI because you actually revised down 0.2 X food energy, but then this one came in up 0.1 above expectations. It's a little blurry. Usually markets don't trade so much off the revision. They seem to trade more off of the actual monthly report there. And the monthly numbers there are all up 0.1. So Qs are still a little unclear as to what they have. Okay, yeah, no, it does look like the Qs want to sell down on this. So again, a smidge higher there on the actual PPI month over month, but again, you have that lower revision by 0.1, 0.2. So it's almost balanced, dare I say? And then you have those initial claims coming in a smidge higher than expected with some more continuing claims. But honestly, I don't think that any of this really matters that much. You know, initial jobless claims are highly lagging. These PPI expectations were incredibly low. So not a surprise that you get a little bit of beat, especially if you're comparing to a lower revision. So, wow, okay. All right, let's go look at the actual... I generally dislike going through the PPI report, just because it's so, you know, it's 4 stages of demand that they look at. It's very complicated to really see what's going on in there. So let's just look at the cover of the report. Final demand prices were unchanged in July and rose 0.2 in June. That's the revision. The August rise in the index for final demand can be traced to a 0.4% increase in final demand services. Okay, not ideal. Final demand services is usually where you're seeing some pressure from, you know, the Fed trying to get some of these numbers, you know, to start moving a little lower, right? Prices for final demand, less food, energy, trade services advanced 0.3 in August, the same as July. For the 12 months ended August, the index for final demand, less food, energy, trade services moved up 3.3. Okay, final demand services after declining. Final demand services rose 0.4% in August after declining 0.3% in July. Nearly 60% of that is attributable to a 0.3% increase in the index for final demand services, less trade, transport, and warehousing. Okay. Final demand services, less trade. Move for final demand services. Yeah, this is an interesting one. Product detail, 4.8% rise in guest room rental was here it is. Look at this. A 4.8% rise in the index for guest room rental was a major factor in the August advance in prices for final demand services. The index for machinery, vehicle wholesaling, fuels, residential loans, professional commercial equipment, blah, blah, blah. All this fell. Admissions fell. So is this right here. Guest room rentals had some kind of weird spike. Weird. Okay. You know, you did also in the CPI report see a bump in the airfares category and in the lodging away from home category. So it seems like there is some kind of weird, like, decline in June and July, and then a pop-up in August on some of those levels there. The final demand, or oh, why is that so? Hold on. Ah, sorry, that was the mic was a little louder there than it usually was. I think either Max or a baby or something accidentally hit a dial-up. Let me get a better balance here. Test. Yeah, I think this is probably better. Hopefully that's not too quiet. I don't know. I'll look at some of your comments here. But anyway, okay, so that's interesting. Okay. Again, I don't know that, you know, this really matters right now. And let me, we're going to write down some of these notes in a moment here. But I want to see what BT Sizz is doing on this. So you've got... Yeah, BTC's moving down on this, as the Qs are. Some disappointment there. Somebody says louder is better. Somebody says too quiet. Ah. Yeah, your opening seconds woke up my neighbors. Oh. Okay. Yeah, what happens is I'll bring him in here. And, you know, Ella lately, she'll kind of do this. And start grabbing things. So, I gotta be careful. I don't know how else that could get slid up like that, and it's kind of like perfect in that range. But anyway, all right. So sorry about that. I will Hopefully this is better. But yeah, I was wondering yesterday too. I'm like, why are my videos coming in with such hot volume? I guess that should have been an indicator to me. When I filmed a video yesterday, I had to like turn it down quite a bit. Yeah, that would have probably been a good indicator. Oh well. So, okay. Let's see here. Let's write some of this down. All right. So PPI, we're gonna call it all month-over-month figures 0.1% above expectations. However, let's write that down. However, prior month-over-month expectations revised down 0.1% month-over-month and 0.2% month-over-month less food energy. Let me just fact check that I got that correct. I'm pretty sure I did. Yeah, that is what happened. Yeah, and the year-over-year number was actually revised down too. Oh, that's very interesting. That year-over-year revision wasn't actually in yet when we were looking at it. Now it is. Okay. So, year-over-year, at expectations, 1.7% and 2.4% x food energy. Okay, and then when you go year-over-year x food energy trade, you're at 3.3%, and there was no survey for that. And then the year-over-year revision, minus 0.1, so down to, or I'll just say revised down 0.1%. And year-over-year, all year-over-year figures were revised down. Prior month-over-month revised down 0.1 month-over-month, and 0.2 less food and energy. Okay. All year-over-year figures revised down last month by 0.1%. So the revisions kind of help land you a little lower. I want to see if Rick is yelling about the revisions.
There was huge head-snapping revisions on people.
Dude, that was priceless. Oh my god. Dude, this guy, it's perfect.
Dice it any way one wants. It didn't make a big difference in the market because the tell's already in what's going to happen next week.
Let's bring in former. I want to bring in Roger Ferguson, former Fed Vice Chair and former President and CEO of TIAA. Roger, I think about you sometimes that you're one of these people that gets paid to worry, I think. And I think you were really worried about inflation staying sticky and not being totally vanquished. And I'm just wondering now whether you're in a good place about what the Fed's getting ready to do. And I think, have you come around to the notion that you need to worry a little bit less at this point, or still worried?
Well, look, two or three different questions, and let me answer them in order. First, I think the 25 basis point reduction at the upcoming meeting is... I'm
going to have to clip that and be like, when you've done this job too long.
I've never understood where the 50 basis point concept came from. So 25 basis points, I think, is the most likely expectation, and perhaps more of the same this year. Point two, headline inflation has been moving very gradually down. And so I think there's still some reason to be worried. But point three, and Rick Santelli is right, you can take these apart and slice and dice them. What I've been focused on is places that do appear to be consistently sticky, one of which is housing. And I think there's something structural going on there. So overall, count me still in the camp of, yes, I think the Fed's right to be more comfortable that inflation is coming down. But I think they're going to be on a very gradual path because there are some elements of stickiness there that we just simply can't ignore.
You are still worried. I thought maybe you were, and like I said, that is, you consistently have been right, as we've pointed out many times about that. I think Rick's been worried about that as well. But most people at this point have shifted their main concern to growth worries now, Roger, and they don't seem to give inflation concerns the same weight anymore.
I think that's again, overdone. So people have gotten very focused on the unemployment number, where it's moved up quite significantly. I remind people that the number 4.2 in the old days, we'll put it that way, was considered close to full employment.
And see, that's exactly what I'm worried about. I've mentioned that a few times, that people like this are going to go, oh, well, back in my day, the unemployment rate, under 5% was great. And then it's going to be like, okay, buddy, yeah, let it go back to 5% and see what happens next. Because once you start getting the unemployment rate moving up, and you're just sort of ignoring it like, well, historically that was okay, then it just keeps going. Because it's one of those flywheels that once you start, it's so hard to stop. And I personally think there are a lot of companies right now that are just on the edge, on the bleeding edge of layoffs. And I could be wrong, but I know there's been a lot of labor hoarding, but I think there are a lot of companies that are like, man, okay, hopefully we don't go into a recession, but if we go into a recession, we're starting to make our list. It's like Santa Claus. Okay, all right.
Hey, Becky, that's right. Gilead this morning saying that their twice-yearly shot for HIV prevention actually prevented almost all cases of HIV in a study of men who have sex with men. There were only 2 cases out of about 2,000 people.
That's actually good for gay people. Being able to prevent that. That's so terrible for that community. Anyway, somebody here says, Kevin, you were too used to government spending to hold unemployment down. Shame. You're gonna throw holy water at me. Yeah, maybe. It's possible that government infrastructure spending, government hiring, it could be the reason why unemployment is in that 3 to 4 range. I'm just more worried. I don't disagree with you that 5% is okay. My concern is just what happens when you are on the trajectory of going from 3.5 to 5. Well, then you might be on the trajectory towards 6 or 7 or 8, and then you're in a recession. You knock on the door of 6, 7, or 8, you're in a recession. So that's the problem. Yeah. So let's see what else here. What sites are good for economic data? I really like St. Louis Fred with an R in there. St. Louis Fred. Dude, who's this guy? He's going to sell me a Monopoly board.
Which put out today's report. Saul, by the way, joins us from the annual Latino showcase, Latitude, that's in San Diego. CNBC is a media partner of Latitude, and our parent Comcast is a sponsor of the event. Saul, break this down for us. What did you learn in this report? What should people be paying attention to?
Somebody says, or a casket.
Good morning to everybody.
Good morning.
It's a pleasure to be here. The good news, once again, is that the Latino cohort is almost like a half silver bullet for our economy in terms of buoying everything, whether it be the complete GDP number of $3.6 trillion. It's about manufacturing, almost $450 billion worth of manufacturing, accounting for about 17% of our manufacturing productivity inside our country. It's about population growth. It's about entrepreneurship. It's about
Okay, I have no idea what this guy's talking about, so I'm going to get off this. Somebody says, more of a big fan of Adam Smith. Yeah, so, in Wealth of Nations, the idea is that you should let the free market. Oh, I do want to listen to this guy a little bit. You should let the free market reign, not so much government intervention. But, that's not politically popular because the free market, really is brutal. At businesses and employment, and honestly, probably rightfully so.
Is it correct? Yes. Is it well received by regulators? Absolutely not. You see this, I find it fascinating, the reaction to an 80-20 AI innovation. The US embraces the 80 and doesn't look at the 20 as much as it should. Europe completely embraces the 20 downside and forgets about the 80 upside.
This was a point Draghi was making on tech. I'm laughing because essentially you're trying to lead Mohammed to say something negative about the German reaction function to
No, I think
what he's saying.
he basically said it about the European bureaucracy.
Well,
sure.
He talked a lot in much more diplomatic terms, but that was sort of what he was trying to get to you.
I wasn't going to ask questions about the difference between sort of Italian culture at banks versus, say, French and German, and why the German Labour representative seems to think they have more in common with the French banks than they do the Italian banks. I wasn't going down that road.
Will you go down the road of AC Milan should be owned by a German?
I think it should be owned by a Frenchman. I know. I said that repeatedly.
Because he wants to.
What's going on these shows today? They're just talking complete nonsense. All right, whatever. There must be a slow news day. I mean, I thought we did just have some news, but whatever. So let's see. How are things holding up on all this? So BTC's trying to get down to a big support line. The good news is it has a big support line to get to that ain't that far away. That I'm telling you, man, that 57,580 line. Woo! It's remarkable. You know how supportive that one has been. So I like watching that one. DJT. Oh wow. We are now down. We were down 10.4 yesterday. It's actually not as bad as it started out in the day. Down 2% at the end of the day. Although you did have a really nice sudden rally in like Nvidia, which was really cool. I mean, Nvidia, I think, yeah, look at that. Up 8% yesterday. It's crazy. And look at where it bounced. It bounced out roughly at my 101 number, within about 8 pennies of that. And really, once it broke out of the 108.08 line, explosion. So good for Nvidia. Still a little bearish there on BT. You've got Tesla dropping down about 1% here. So had a little gap down there on some of those numbers that came out. That's all right. Palantir, still knocking on the door at 35. Pretty impressive spot there. Oh, I do want to hear Christine for a moment.
Staff see headline inflation averaging 2.5% in 24, 2.2% in 25, and 1.9% in 26, as in the June projections. Inflation is expected to rise again in the latter part of this year, partly because previous sharp falls in energy prices will drop out of the annual rates. Inflation should then decline towards our target over the second half of next year. For core inflation, the projections for 24 and 25 have been revised up slightly as services inflation has been higher than expected. At the same time, staff continue to expect a rapid decline in core inflation from 2.9% this year to 2.3% in 25 and 2% in 26. Domestic inflation remains high as wages are still rising at an elevated pace. However, labor cost pressures are moderating.
Somebody's like, she's like a retired James Bond villain. Oh.
Wages on inflation. Financing conditions remain restrictive, and economic activity is still subdued, reflecting weak private consumption and investment. Staff project that the economy will grow by 0.8% in 24, rising to 1.3% in 25 and 1.5% in 26. This is a slight downward revision compared with the June projections, mainly owing to weaker contribution from domestic demand over the next few quarters. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. We will keep policy rates sufficiently restrictive for as long as necessary to achieve this aim. We will continue to follow a data-dependent and meeting-by-meeting approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will be based on our assessment of inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release available on our website. As announced on March 13, 2024, some changes to the operational framework for implementing monetary policy will take effect from 18th of September. In particular, the spread between the interest rate on the main refinancing operations and the deposit facility rate will be set at 15 basis points. The spread between the rate on the marginal lending facility and the rate on the main refinancing operations will remain unchanged at 25 basis points. So I will now outline in more details how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Turning to the economic activity. The economy grew by 0.2% in the second quarter, after 0.3% in the first quarter, falling short of the latest staff projections. Growth stemmed mainly from net exports and government spending. Private domestic demand weakened as households consumed less, firms cut down business investment, and housing investment dropped. While services supported growth, industry and construction contributed negatively. According to survey indicators, the recovery is continuing to face some headwinds.
That's not good, my friends.
We expect the recovery to strengthen over time as rising real incomes allow households to consume more. The gradually fading effects of restrictive monetary policy should support consumption and investment. Exports should also continue contributing to the recovery as global demand rises. The labor market remains resilient. The unemployment rate was broadly unchanged in July at 6.4%. At the same time, employment growth slowed to 0.2% in the second quarter, from 0.3% in the first. Recent survey indicators point to a further moderation in demand for labor, and the job vacancy rate has fallen closer to pre-pandemic levels. Fiscal and structural policies should be aimed at making the economy more productive and competitive, which would help to raise the potential growth and reduce price pressures in the medium term. Mario Draghi's report on the future of European competitiveness and Enrico Letta's report on empowering the single market stress the urgent need for reform and provide concrete proposals to make this happen. Implementing the EU's revised economic governance framework fully, transparently, and without delay will help governments bring down budget deficits and debt ratios on a sustained basis. Governments should now make a strong start in the direction of their medium-term plans for fiscal and structural policies.
Okay, all right. I think we got a good little sample there. This idea here of so far the labor market remains resilient, I always think is interesting because what you balance this with is what she just said, which is, hey, the economy fell short of expectations, private domestic demand weakened, households consumed less, firms cut down on investment, housing investment growth dropped, and industry and construction contributed negatively, and unemployment growth fell to just 0.2% in the month. So you have this, real risk of potentially slowing down much more than these central banks want. And they might be looking too much in that rearview mirror and overdoing it. There was another little note I saw here. It says, this is not me, it's It's a Doomberger. But another Doomberger here says, unemployment claims may overstate the health of the labor market due to declining eligibility for benefits, shrinking compensation levels for documented workers, and rising unemployment among recent migrants. So basically, the unemployment claims may be giving a false sense of confidence, they think. So, yeah, anyway. But none of this, I think, is suggestive of getting a big old fat 50 bepizzle cut.
The overall growth in labor costs is moderating.
No wage price spiral.
Per employee fell further to 4.3% in the second quarter, the fourth consecutive decline. And ECB staff projected to slow markedly again next year. Despite weak productivity, unit labor costs grew less strongly in the second quarter, by 4.6% after 5.2% in the first quarter. Staff expect unit labor cost growth to continue declining over the projection horizon, owing to lower wage growth and a recovery in productivity. Finally, profits are continuing to partially offset the inflationary effects of higher labor costs. The disinflation process should be supported by receding labor cost pressures and the past monetary policy tightening gradually feeding through to consumer prices. Most measures of longer-term inflation expectations stand at around 2%, and the market-based measures have fallen closer to that level since our July meeting.
You know, what's interesting is I remember you've actually got gold hopping a little bit right now, up 0.79, and there are quite a few institutions that really like exposure to gold right now, just because they think gold can move up, soft landing or not, certainly in recession. I'm not convinced by that. Usually in a soft landing, gold performs poorly, and in a recession, it skyrockets. So it's less of that dual bet. You know, something I was talking to course members about yesterday was in this position in the market where I think valuations are still rich, and I think this euphoria around, it's just all gonna only go up, is high, and investable cash is low, and recession indicators are high. I personally would rather lean towards something that does well, that does okay in a soft landing, but does really well in a recession. And so that's why I got a, nearly multi-million-dollar bet going, and we talked about that bet yesterday. We'll talk about it probably some more today. It takes like a whole 20-minute or more explanation to really go through. But if you want to see that video, that course live yesterday, make sure you use your flash sale coupon code before 6 o'clock today, and you'll have lifetime access. So if I got another crazy big bet in 3 months, you'll know about it. 5 years, you'll know about it. It's kind of cool. Go to meetkevin.com to learn more about that. Okay, let's see what else there is here from her.
By contrast, inflation may surprise on the downside if monetary policy dampens demand more than expected, or if the economic environment in the rest of the world worsens unexpectedly.
Yeah, like the US.
Financial and monetary conditions. Market interest rates have declined markedly since our July meeting, mostly owing to weaker outlook for global growth and reduced...
I remember they used to say the risks to inflation remain to the upside. Now they're saying the risks to growth are tilted to the downside.
Tightening of financial conditions in the riskier market segments. Overall, financing costs remain restrictive as our past policy rate increases continue to work their way through the transmission chain. The average interest rates on new loans to firms and on new mortgages stayed high in July at 5.1% and 3.8% respectively. Credit growth remains sluggish amid weak demand. bank lending to firms grew at an annual rate of 0.6% in July, down slightly from June, and growth in loans to households edged up to 0.5%. Broad money, as measured by M3, grew by 2.
Yeah, all right, it's getting a little boring. Okay, so right now we're pricing in 15.8 percent chance of a 50 basis point cut. It just basically guarantees that we're going to be getting the 25. We kind of already knew that. And let's see here. Nvidia. Oh, Nvidia did just drop off a little bit. Yeah, well, it's around flat right now. Flat on Nvidia, flat on the Qs. End phase down slightly. BTC's literally about to be at my line. Tesla down about 1.3. Was only up 87 bips yesterday. What else is notable here? Apple still at 222. Red Robin Gourmet Burgers up 4% in pre-market. Oh, that's it? We're going to the moon? YOLO. Oh, that was the bear. The bear. Okay. Well, how's Mickey D's been? Mickey D's. That little run there a couple days ago, actually. Look at that. Zoom out on the day chart here. Oh, that's nice. Look at that since earnings. Really popped off quite a bit. I actually think McDonald's typically does well, relative to other stocks in a recession. That doesn't mean it doesn't go down, but it seems to do better if you just look at prior recessions. No guarantees that'll be the case now. And who was talking about this yesterday? Oh, I think it was JP Morgan as well. I was going to cover it, but they were talking about how profitless tech companies, somebody here says, those who bought gold at 2,000 have finally broken even on their investment. Great job. Those who buy gold now will need it to be 3,100 to break even. Bullion exchanges getting rich. I think what you're referring to is the fee of actually having physical gold shipped to you and the minting fees and all that stuff. I mean, you're basically adding 25-ish% there. You could just buy IAU. That's not a pitch for it, but that's a gold ETF that gives you liquidity. So that's an interesting one. Physical gold premium. Yeah, exactly. Yeah, no, I do find that to be a little challenging. But anyway, so JPM was talking about ARK a bit, not directly mentioning ARK. They were just talking about unprofitable tech companies. And they're like, those were amazing during COVID when there was you couldn't basically lose money in markets. Because, even if your company lost money, it just kept going to the moon. And they're like, this is the most punishing market to profitless tech companies right now. Mention. Very interesting. What's worse, not holding your gold or not holding your keys to Bitcoin? Oh, well. Guess it depends. Oh, look at that. Popping off now. Let's go. Right above the line. So, Kevin, why is Roku up $4? It's a scam. Roku. Well, it was up 7% yesterday. It's got some liquidity. Pre-market here. Let's see what's going on with the Roke. The Roke of the coup. Somebody says, I sell gold for a living. Premiums are only about 3% per ounce and up to 15% for smaller coins. That makes sense. Yeah, I don't know where that 25% came from. I wonder if they're talking about shipping. But shipping hasn't been that expensive. Roku rises as Wolf upgrades sales growth and falling risks. All right. Well, there's your Roku. So, Roku upgraded by Wolf. falling risks and upside growth. And they're pretty low there. McDonald's extends $5 meal in battle for cash-strapped buyers. The chain will extend the $5 meal. McDonald's is also releasing app-exclusive promotions. See, they're brilliant. I mean, this is just the game you have to play in this environment, you know. So McDonald's app-exclusive promotions like $2 chicken sandwich. Actually, sounds pretty good right now. And what else we got here? $5 meal that started in June is being extended. Lifted guest counts by 3%. That's interesting. Broader reset in value offerings. Fast food chains are competing for cost-conscious guests. Blah, blah, blah. All right. McDonald's 99-cent may work for them. Who really eats McDonald's? Oh. Well, it's not technically food, but, you know, it does fill you. Okay, that's evil. I kid. Okay. Don't sue me, bro.
Poopy doopy.
I gotta have a don't sue me, bro here somewhere, don't I? I think I do. Oh, yeah.
Don't sue me, bro.
That's funny.
Coupon code expiring soon. Link below. This is not personalized financial advice.
Don't fight.
Buy the dip.
All right. So let's see here. Nvidia, 9 bips to the upside now. Okay, we saw that on the revisions. JP Morgan to cap junior banker hours. Okay, let's see what this says. Let's see here. JP Morgan. 2 Wall Street investment banks are rolling out measures to ease junior bankers' workloads amid complaints that hours are creeping past 100 hours a week. Now you'll be limited to 80 hours per week. Oh, okay. Oh, the bankers. OpenAI is getting closer to releasing its new artificial intelligence model known as Strawberry that can perform some human-like reasoning, according to a person familiar with the matter. OpenAI declined to comment. This technique is sometimes referred to as chain of thought prompting. Somewhat different than what people have come to expect. Before responding to a user's prompt, the new software will pause for a matter of seconds while behind the scenes considering a number of related prompts and then summarizing what appears to be the best response. Interesting. Okie dokie. Oh, they're doing some Q&A.
Thank you very much for your 2 questions. On your first questions, we can all count. It is 6 weeks before October 17th, which is a relatively short period of time compared to other intervals that we've had in the past. I would simply repeat what I have said. We are going to be data dependent. We are going to decide meeting by meeting. I'm not giving you any commitment of any kind as far as that particular date is concerned. And our path is not predetermined at all. On the other matter that you referred to, typically we do not comment on individual institutions. And as you know well, we have a clear procedure which involves our supervision authority, the SSM, which at certain thresholds of equity ownership or transfer of shares, if you will, has to be consulted, has to authorize, and of course, I'm confident that the authorities of these institutions concerned, namely UniCredit and Commerzbank, will be perfectly aware of their regulatory requirements and will comply with such requirements. The SSM will do what it has to do in full independence, and clearly cross-border mergers have been hoped for by many authorities, and it will be very interesting to see that process unfold in the weeks to come.
Thank you. And the next question goes to Mark Schreers of Bloomberg. Mark, please.
Yes, thank you. The first one, you said again that the rates needs to be sufficiently restrictive for some time. How many times can the ECB cut interest rates before they are no longer sufficiently restrictive? So basically, where do you see the so-called neutral rate? And the second one is more on the effect of interest rate cuts. How much of a boost could such cuts deliver to the euro area economy, given that at least some, if not most, of the problems are structural? Thank you.
I'm going to thank you for your two questions. I'm going to spend a bit more time on your second question, because on the first one, how long are we going to be sufficiently restrictive? Until we have been sufficiently restrictive. Because what we want is to achieve the goal of returning inflation to target.
No, this is kind of boring.
The fifth projection exercise, we have inflation at target during the second half of 2025, and that is on the basis of the baseline that we have in our projection. And we're going to observe how that baseline evolves over the course of time as data comes in to decide for how long we have to continue cutting rates and at what point we have been sufficiently restrictive. So I'm not going to give you any idea as to where our star is, because this is an unobservable concept anyway, and we will, as we get closer to it, we will know certainly better. As you probably know, staff has produced a very good paper on our star, which indicates that it's...
All right. Take a look at this. This is Microsoft lays off 650 video game workers. So they bought Blizzard and then just laid off a bunch of people. I always hate seeing that because it's like, we want new video games. That's a bummer. Laying off 650 employees from Blizzard. They acquired Activision. The layoffs are mostly in corporate and support roles. All right. Mostly, they say. No studios will be closed. Games canceled. Sure. Significant downsizing in the global industry. Demand for interactive entertainment shot up during the pandemic. Following decades of mostly steady growth, consumer spending declined in 22 and has only rebounded modestly since then. Heavy moves into AI. This follows Xbox's decision to let go of roughly 1,900 workers at the start of the year and the closure of 3 studios in May. Wow. That is a bummer. Oh well. It is what it is. Alright. What else? What else, my friends? What else? I don't know. A little more. Let's see if somebody asks her a good question.
Gives me a chance to actually command the Draghi report. We haven't had time to dissect everything. Neither has anyone, for that matter, because it's sufficiently substantive and material enough to require more time and special attention. But it's a formidable report in that it poses a diagnosis which is severe, but which is just, in our view. And it also points to structural reforms, practical proposals to achieve...
No, that's highly boring. Okay, let's get off this. I don't even want to see her anymore. Yeah, okay. That's boring too. Fine then. Here, we'll look at the cues. This is Roku. There. Look at the queues. All right. Microsoft. So we saw that Xbox expected to lay off 1,900 workers at start of year. Ooh, I wonder if you're going to get a lot of start of year layoffs. And then Microsoft. Now, would you have 650 employees? A layoff at Blizzard. Womp womp. Although I wonder how many people work there. Let's see. Employees at Blizzard. Blizzard, 17,000. Wow. I didn't know there were that many, honestly. 650, 17,000, 3.8%. Okay. Xbox. And then how many employees work at Xbox? Microsoft Gaming, 20,100. I don't know if that includes... Oh, Xbox has 5,000 employees. Oh, well, 1,900 out of 5,000. That's a lot. I don't know if that's accurate, though. I can't fact check that. 2022. 5,000 employees. 5,000. Well, 1,900 is a lot. Out of 5,000, that'd be like 38%. Potentially 5,000 at Xbox. Xbox have 17, or Xbox have 5,000, and Blizzard has 17,000. That's crazy. It's just huge companies. All right. So let's see here. Oh, Nvidia just fell. What happened? The pre-market happened. The volatility in the pre-market is always interesting. Oh, Jim Cramer came on. That's what happened.
It's going to open up 4.
I'm always suspicious of ever recommending an airline since, as David knows, they've always been tragic in recommending.
They don't end, it rarely ends well.
Right.
There was, their cost of capital.
Okay, Jim Cramer's bearish on the airlines. Delta's going to go to the moon.
Came in, I was looking at the tip and said, Alaska Air doing well. Well, I mean, geez, JetBlue, Alaska Air, next is going to be with that Allegiant.
I don't know if there's news or something, but it's look at Delta right now.
Fly Eastern.
Fly Eastern.
Fly East.
Yeah. How about the light bulbs TWA bonds? Remember that?
Yes, I kind of do.
Maybe Jim will cover it in his mad dash. We'll get that and the opening bell after a short break. Don't go anywhere.
Yeah. Okay, let me go see if there's news on Delta. Because that's kind of funny. Oh yeah, okay. They had news. Okay. So let's see here. Let's see what happened to Delta. Oh, Delta. Delta. All right. Q3 capacity and investor growth in line. Okay, that's good. So it's not declining. What else here? This Delta Airlines sees Q3 rev flat to up 1%. Q3 rev flat to up 1%, down from prior 2 to 4% guide. Okay. Delta fiscal year EPS view excludes 45-cent impact from CrowdStrike outage. Wow. CrowdStrike really screwed them, huh? 45 cents? And it looks like Alaska's going up too. Alaska Airlines up 5%. Fuel costs were expected to come in lower. Capacity remains in line with prior expectations. Blah, blah, blah. Recovery from CrowdStrike. Blah, blah, blah. Okay. Fine. What else? Stocks fluctuate after PPI data. Yeah, boring. Yes. Okay. How about... Kroger raises sales outlook on resilient grocery spending. Huh. Okie dokie. Yeah, it's funny. I wrote that down too. ECB says rate cut path is not predetermined. As soon as she said that, I saw yields. Yields went up as soon as she said that. So I think people think they're just gonna kind of keep cutting and cutting and cutting. U.S. Navy SEAL unit that killed bin Laden trains for China invasion of Taiwan. What? Look at that. SEAL Team 6 that killed Osama bin Laden has been training for missions to help Taiwan if it's invaded by China, according to people familiar with the preparations. The team... Finally, some 23andMe news. Oh, what's the 23andMe news? Let me look at that, and then I want to come back to this. Wasn't Anne trying to acquire it? Continues to evaluate remaining shares. Open to considering takeover proposals. I mean, I don't... Is that news? Yeah, I don't... I think we already knew that, no? Yeah, I think so. Okay. So anyway, going back to this. The Elite Special Forces team, which is tasked with some of the military's most sensitive and difficult missions, has been planning and training for a Taiwan conflict for more than a year. Secret training underlines the increased U.S. focus on deterring China from attacking Taiwan while stepping up preps for such an event. That's quite interesting. Oh yeah, that captain rescue of the container ship taken over by Somali pirates in 2009. That was pretty cool. Whole movie on that. Covert, highly classified missions. They train for a wide variety. Yes. Huh. Taiwan military drills turn serious as China threat escalates. That'd just be crazy. Taiwan's military drills turn serious as China threat escalates. Oh no! Huh. This time we are exercising the ability of small units to operate in the event they are cut off from more senior command. Jeez. What a mess. What a mess. Alright. So, Oracle's up 81 basis points. That's cool. Delta, Roku, they're all up about 5%. Nvidia is giving back, you know, a couple little points. Who cares? I mean, it's done very well here in the last 24 hours. Bitcoin's basically on my line, and then Tesla is a little down, a little poopy doopy. Okie dokie then. So, what else? Let's see. Bell in 4 minutes. You've got... gold's almost up a full percent now. 89 on gold. How's the yield curve? The yield curve. The inversion. That's what we need. We need the halo guy. Okay. So we're 1 basis point uninverted. We're like basically right there at equal. 1.2 basis points now. It's moving around. Okie dokie. Somebody says Tesla hasn't mailed me my plates. Just don't use them. Just kidding, don't do that. So let's see here. Robin the Hood. Oh, let's see how Robin the Hood's doing. Somebody else says gold to 3K by end of year. I'm gonna go. What was I gonna look at? Oh, the Robin the Hoods. Robin the Hooders. Oh, they're over $20 again. Good for them. And Oracle's now up 1%. That seems to be a bullish trajectory. Okay. Where are the trades today? There we go. Okay, so 23andMe is moving up. Roku, Delta, Bill.com, Build-A-Bear, Red Robin. They're all moving up today, and Oracle's moving up. To the downside, you have Space Mobile, Tesla, Trump SPAC, ARM, Micron, AMD's giving back a little bit, Nvidia. Nvidia is going down again a little bit. Yeah, just as we're getting into that pre-market there, or into the open. So, all right. What do we got here?
Are bad. And sometimes in the technology space, in the private equity space, you need to let some companies buy other companies. That's how investors get capital returns. That's how you promote capital formation.
Republican VP nominee J.D. Vance earlier on Squawk today, who has his own debate coming up with Walz in the coming weeks.
Yeah, look, I think that these have always been hot buttons, what's censored and what's not. I also think that I'm always surprised that people don't recognize, don't start talking about TikTok and the influence that it has on politics. There's just it's a free-for-all in digital, Carl. I mean, you can get anything. I don't buy the idea that there's censorship. I don't buy the idea. I think you have to do this. I think you have to just take everything with a grain of salt that's on social.
Interesting hearing him talk about antitrust policy as well.
What's that?
Obviously a key consideration as well for any number of the supporters in the business community of Vice President Harris, who I understand have been pressuring her as well, that if in fact she were to win the election, that she would get rid of
Mina Khan?
Yes.
Really?
That's what they would like.
But ahead of the handback? Litigation conclusion? You know,
but there's frustration, and it was interesting hearing Vance talk about the antitrust side, at least saying some deals should be allowed to happen. Obviously, they do. But.
Look, I look at a lot of social media, and when you look at Meta AI, that's the one by Meta. You're always afraid that it's too influenced by social media and therefore not as accurate as you'd like.
Well, Vance himself the other day said, keep the cat memes flowing. We'll see. Election memes and dynamics definitely heating up. That's a big word today. It's Palmer Square Capital Management celebrating the launch of 2 new ETFs at the NASDAQ. It's Chinese.
I feel like they changed that board a little bit where like those little boxes come up differently. That's interesting. Well, it's about 50-50 right now. Well, let's see what ends up happening here, I guess. Looks like if you jump into the open here, you've got what do you have? You've got this is Nvidia that we're watching right now. Nvidia's doing a little drop of dudes here. And so it looks like you're kind of rapidly falling on Nvidia. The Qs as well. I mean, the first minute of the day is always freaking nuts anyway. We all know that. It's just like crazy. So, who knows? We'll give it some time here. But Q's not happy, especially after yesterday's rally. It might, I was reading a little bit that unemployment claims might be what are driving moves today. And you had a slight move up in unemployment claims. But and unemployment claims do sort of lead the unemployment rate, but they sort of move in line with it, so it's just sort of like a weekly update of it. But it's not a really good leading indicator of like a recession or something, mostly because, well, once the real unemployment comes, you tend to be in a recession already. But markets still tend to trade off the unemployment claims, and I find that very interesting. But yeah, so if we take a look at this, you can see the Qs are going a little oopsie doopsies. Nvidia's going down. Let's see here. 23andMe's up 8%. That's cool. Roku, Delta's only up 2% now. What else? Enphase dropping. It just can't get back to its 113 line. It's kind of weird. And, oh, look at that bounce on BTC. It's perfect. It's a perfect bounce. It couldn't be more perfect. I asked for perfection. Alright, that's cool. So, Apple. Oh, Apple had a little leg down here as well. Okay. Amazon. What else here? DocuSign. Okay. Yeah, look at that. Here's Nvidia trying to come back a little.
Will it last? Will it last, me friends? I don't know. Looks like the Qs are recovering now.
Okay, let me see if there's any news in the meantime. So, let's see. Okay, we looked at 23andMe. Nothing else new over there. ECB traders should look past the September CPI readings. Data dependency doesn't mean data point dependency. We're not going to be fixated on a single number. Oh, that sounds like a line Powell's going to take notes from. Data dependency does not mean data point dependency. We should add that to our bingo board next time. That would be funny. All right, I'm going to write that down. Fed. Data dependency does not mean data point dependency. Okay. ECB quote. And then I want to write, will Powell adopt this next week?
Yes. Then give us the big 50 too. Will Powell Wowell adopt this next week?
Then we'll know exactly where it came from. Yeah, that's funny. Okay. Hey, look at Tesla. A nice little pop there, eh? Trying to get back to 230. 230. All right. Major averages tracking for 4th positive week out of 5. Yeah, I think that brings us to, this is comparing back to August 6th. It's been a good run since August 6th. August 6th was a nice little shock. Let's listen to Jimbo.
Earnings season. Well, I mean, this is about credit, read across GM. And I've got to tell you, at GM and Ford, this piece made me feel very uncertain about the orders.
I mean, he says basically margins are not sustainable, delinquencies are up, inventories are up, and that remember when you couldn't get a car, at least not the kind with the specs you wanted.
And what's happened is that, again, I'm a broken record on this. This is what happens before a rate cut. You can't go on a rate cut with things great. That's one of the things that people don't seem to understand. See, when things are great, you don't cut rates. When things aren't great, like with autos, you cut rates. Why do people continue to think that, well, I want everything to be great, and why doesn't it do 50 basis points? Well, you can't have your cake. You can't let them eat gâteau.
How about yogurt? Maybe they eat yogurt.
David, you don't talk nearly enough about the food M&A. It's happening left and right. Where are you? Where are you?
All right, Tesla's going for 230. Here it goes. Can it hit 230? Here it goes. Big line right there at 230. It's actually a little gray line. It's bounced there a few times. It's not the strongest, but it does seem to be a spot you get some pretty solid activity at right there at that 230 level. So I don't know though. Oh, and what do we get tomorrow? Let me see here. Tomorrow we get, I think we just get U of Mish. So a little boring. Let's see here. We get import-export prices, University of Michigan. So not really a lot in the way of new data tomorrow. Let's see. GameStop down about 145. Look at Tesla perfectly play the 230 line. Robinhood's up a couple. Delta's kind of losing some of its enthusiasm. BT says, holding on to the line. Hold the line. Still almost there at 230. And then we've got, let's see here, Apple. That's an interesting little decline there on Apple. I mean, it's post-iPhone event. You know, I think you can start pre-ordering it tomorrow. I think that's when the pre-orders begin. It's like 5 in the morning on Friday. Okay, so you should make sure to sleep in tomorrow so you're not convinced to buy one. Oh yeah, Amazon's doing a little bit of a move up. Nice, nice. Oh, there's Tesla. Come on. Somebody here says, am I the only one who thinks these inflation news we're getting are insanely bad? We didn't need any pressure from that side. We need as many cuts as possible. Yeah, actually, I agree with you. It is unfortunate because even though you have like this revision on PPI and this like smidgen hotter CPI, if it leads the Fed to go slower, yeah, it just pushes you deeper into a likely recession. So, not ideal, you know? Not good. Not good at all. Well, but this is good for Tesla, though, because you're getting a little break over here. So, yeah, very interesting. Any house hack? Yeah, we got a big house hack video coming. It's just taking a while to put it together, but hopefully this weekend. So it'll be fun. Good detail, appraisals, next plans. It's just really more of the same, but in terms of like what we're actually doing at the company. But yeah, it'll be kind of fun. So, can Tesla hold the line? Hold the line! It's not working. The sound effects are not working. Okay, we'll try the mouse. Bullshit! This way! This way! No! It is not working. Let's try sad music. Oh, it's just the opposite. Alright. Sad music brings the green candlestick. Yeah, look at that. Happy music just pushes it up down more. It's always the opposite. So, alright then.
Green.
Sell.
Ah, see, it's working. The bad music is making it go up.
Big L. Poopy doopy.
Yeah, see? Look at that. It's magic. It's whatever you think would be logical, the opposite happens on the candlesticks. Somebody says ASTS is tanking. Oh yeah? Oh yeah? Well, Nvidia's going up. Oh yeah. Well, I mean, it did meme in fairness, right? Like, this is like a total meme move, and now it's bleeding. Somebody's like, story of my life. Yeah. Yeah, JW, how dumb could you be? You act happy when it goes up, but you're really mad because your shorts are getting smoked. I have no shorts, you dummy! With the exception of a tiny little bit of short Bitcoin. Like people think because I'm bearish, I have puts. I told you I don't have puts. I like literally, I got a play that is a leveraged call option basically on something that I think does well in a soft landing and does really well in a recession. You don't have to be short the market. I think people think that when you're a bear, you're like a villain, but the reality is, this JW guy or whatever, you're just a troll. You're just a dumb troll. A, you don't know what you're talking about, and B, you're dumb. So look at that. Okay, that's fair. But then why are you a 3-3 bear? Bro, every fucking day I tell you why I'm a bear. Where have you been? I literally have a list of recession indicators going that I'm like, I don't feel good about this. What? Well, why are you a bear? Have you not watched any videos? Oh, man. All right, whatever. So, okay, what do we got here? So, Amazon, 64. Red Robin's coming about. Oh, Nvidia's to the moon. Enphase, you can't hold it. Tesla, oh, look at that. See, it was the bear music. Let's do it again. It's the bad music. Let's do some other ones.
The House of Pain.
Big L.
Come on. All right, we gave it the bad music, so it should have another big fat green candle. Stupid. Oh no. Okay. What else? So, let's see here. Gold's up about 1% now, 0.99. Oil's actually up a little bit, but Brent's only at 71. Let's see, how are commodities doing? Bitcoin, 57.7. If I go to the BCom index. Let's see here. BCom, BCom quote. Ooh, Rocket Mortgage is up 2.2%. 2.8%, I'm sorry. BCom, Bloomberg Commodities Index up about 1% today. Year to date, it's been on a roller coaster. Here, look at the roller coaster. This is the year to date roller coaster it's been on. And is Oracle up more? They're talking about Oracle right now. Listen.
Dollars to the purchase of Paramount, the merger with Skydance as well, which he controls along with his son and KKR and Redbird. But $6 billion. I mean, the guy literally made twice that in a day.
What does he make on the interest each day?
Yeah.
Exactly.
Less than what the dividend payments are to the Walmart heirs.
Well, that's good.
On a monthly basis.
Can I offer him an open invitation to come here and sit in Mike Sievert's seat? Okay.
Larry Ellison.
Zim Shipping's up 3.
You. He doesn't care about you. He never thinks about you. And I just want you to know that.
Ooh. Nvidia's almost up 1% now. Look at that. It tells you, it's just like the early volatility of the first like 5 minutes is just like oogie doogie. It's almost like if you really want to find the trend, you gotta wait a little bit, and then you'll find it. So, let's see if it holds today. I'm very interested to see how the day wraps up. You know, are you gonna get? Are you gonna be able to hold this? Because so far on the Qs, you've got this kind of nasty barcode going on. Like I feel like I'm back working at Hollister, and I need to take my little. I got fired from there. Okay, it's not that bougie. Anyway, I want to take my little scanner gun and go. Bloop. I think I have an old picture of me with one of those lasers. I don't know. I doubt I can find it. But anyway, so what else? This is boring. Barcodes. That's all we're getting here. Boring. We need more. More entertainment. I want entertainment. Oh, here's some entertainment. Space Mobile. Okay, so I just want to be clear. I was a big fan of like what they're doing. But I always get nervous when stocks skyrocket the way they did here, and kind of makes me a little, thinking they're probably going to retrace back to some of the lows that they had, more like $15 or something like that. It's not to try to be a bear. It's just, when stuff meme and momentums and then it's, smaller and less known, at some point it does seem to fade away. So that might be what's happening here. It could also be because you had SpaceX and they're doing their, what's it called? What are they doing? They're doing their spacewalk. So some people are thinking that the competition is too real. A lot of competition in that space world. I really like SpaceX, though. It seems like. Elon.
For you, but you just got to catch it early.
We didn't even mention Lilly putting another $2 billion into Ireland.
In Ireland, in 2 different plants, and you think the amount of money they're spending in the last year is equal to the whole Viking Therapeutics, which is why I prefer Viking, the cruise line, to Viking the Therapeutics as stocks, even as I wish Viking Therapeutics well.
Travel names are doing well today. A lot of the airlines and cruise lines helping out, although the Dow's down a bit here, down 123. Watch bonds today. We mentioned the ECB cutting 25 basis points as expected. That's the second time in a few months, and they keep their 2024 inflation forecast intact. 10-year 366. We'll take a short break.
Yeah, see, usually you get these consolidations. You get like a violent move to one direction. The Q's just had a little bit of a violent drop. I don't know if that'll last. I don't see anything that's like mega bearish in news today. The only reason I feel like things might sell down today is if you had profit taking, right? People are like, all right, that was a good bounce we had yesterday. The bounce has been made today, and then take profits. I don't know. I mean, yeah, see, you're getting a little bit of a pull down there on Nvidia. What else? Enphase. Oh, Tesla couldn't keep it up. Oh no, Bitcoin's losing. No! No! Bad news.
The House of Pain.
Reamed. Your boy Kevin just lost lots of money. Big L. Poopy doopy. Fetch me.
Okay. So, yeah, interesting. All of a sudden getting some entertainment. Oh, wow, yeah, look at that. Nvidia was just up like 1%. Yeah, okay. Let me see if anything came through. I don't think so. 649 last 2 minutes. No, I don't think so. Commodities are still up. All indices just went red. What the hell? The Dow's down 34, the S&P 500's down 25, and the Nasdaq's down 20 bips ish. It's down a little more actually right now. So what is Apple doing then? Interesting. Yields, wow. The 10-year was up as much as 3 basis points. And now it's flat. Wait, what's the 2 then? 2-year, we're about 1.8 positive right now on the inversion. Yeah, I need the SpongeBob rainbow to pop up when I say that. Okay. Whatever. I mean, it could just be your typical, normal, daily volatility. I don't know, man. Dude, all of them are tanking all of a sudden. I mean, I get it's better off than where it was at the open. Let's see if the Doomers got anything to say. Okay. German front-on bonds sell off as October rate cuts bet wither. Rate cut bets wither. Okay. Stock swing like yesterday's were rarely seen this decade. Huh. Price action in stocks yesterday was noteworthy, with the S&P recovering from a 1.6% loss to closing up 1.1%. This type of swing has rarely been seen in the last 10 years, with most occasions associated with big stock drawdowns. Okay. So that has only occurred 7 times in the past decade. All years were associated with big sell-offs, although the 7-day forward gains were mostly positive. So in the short run, the track record isn't bad, but it seems like in the medium term, it's not that great. That's interesting. Yeah. Alright. I don't know. It's called the market, bro. Just volatile. Okay, I wonder if Nick T had anything to say. Yeah, Nick T usually chimes in by now. Actually, he's generally up early. Nick T. Alright. Yes. 1 hour ago. 1 hour later. Hey, you got a recovery on Tesla. Alright. Filings for unemployment insurance benefits are holding up at the year-ago levels through August. Continuing claims. What is this? Share weeks into the year. Oh, this is confusing. Oh, so we're here. Okay. So pretty much all consistent. Oh, thank you, Nick D. I'll give you a heart. Yeah, you're already recovering a little bit now on Tesla. Core inflation, lowest since 2021, but up 2.8% from July. That was yesterday. That's it. That's all he gave us. No commentary on the PPI. Nothing. Fine then. All in small caps. Hey, video went positive again. This is your IWM here. Russell 2000. This is the trajectory you've been on. Between those lines. Kind of floating right on the 100 SMA. Okay, let's see what we have here.
Covering this.
Oh, a coupon expiring today at 6 p.m. Oh, you already knew that. MeetKevin.com.
This time around, a couple of years ago when we saw the junior banker revolt, let's call it, it was about pay. It was at a time of a deal boom. This time around, deal volumes are coming back, but the nature of these complaints are somewhat different.
Wow, Delta went from +5 to -1. Just lost everything.
Lost the lead.
That actually make a difference after we hear these complaints, because complaints are not new. They come up time and time again. As you mentioned, pay was one moment in time, but this whole issue and the tensions around the type of working conditions, the hours that bankers are working, the lack of sleep, their health that is deteriorating because of that. This is something that is not new on Wall Street. Veterans will say this is part of the game and that you have to put in the work in order to earn your space in the industry. And so now what we've really seen is pushback from the junior bankers and some really very important moments in time at Bank of America. One of their bankers passing away after working on a very large M&A deal, and that really sparked an outcry, regardless of really the rationale and the reason behind his passing. It just brought up a whole new conversation, renewed the conversation about working conditions. So now what you're seeing is the banks actually putting into place some changes. So for JP Morgan, capping the hours at 80, and for Bank of America, they're improving their system. So instead of reporting hourly workloads every week, the bankers will now be putting in their hours each day so that it's accurately tracking, or more accurately tracking, the type of work that they're doing.
All right, Catherine Doherty, really important reporting. Appreciate your time, of course, on that story that JP Morgan and others looking at ways to cap junior banker hours. Meanwhile, you take a look at markets right now, again, to the downside.
Huh. That's, yeah, we saw that. I think the Wall Street Journal hit that. Yeah. Okay. Okay. Everything seems somewhat happy overall. You know, you got Dell up 2.5. You got Apple that stopped falling, which is fine after its event, you know. You had Nvidia that, yeah, you know, is up like 1%, but it's kind of just hanging out right now. You got the Qs, can't really figure out what they want to do. Trying to see what they want to do when they grow up. Oracle, 2.5%. It's pretty good. You know, they were up like 80 bips in the pre-market. So, there comes that red candle again. It feels a little bearish today, eh? Like, you know, you don't have that enthusiasm that you had yesterday. Yesterday was, much more, snazzy. Snazzy. Okay, let's see. Yields are flat. Yield curve is 1.5 basis points positive. Copper is up 1. Gold's up 135. We saw that go from like 0.6 to 0.8 to 0.99 to 1.3. Interesting. Bitcoin's right there at the 57,580. Gabon's again flat. And then all indices are red at the moment. But barely. I mean, it's not like there's anything wild going on. Let's see. Premature Fed rate cuts will heighten U.S. inflation risks. Don't say such things. Someone from London writes that. Little urgency for easier policy. Yeah, well, that's not ideal. Because once you start the layoffs, it doesn't end. Okay. What else? Let's see here. Ooh. Oh, I want to see, I kind of think you get a stabilization in, you know, the Trump betting odds after the debate, but I'm not sure if that's true, so I'm going to look. So, let's go to Predict It. Oh, no, Predict It still has Kamala Harris at 56, Trump at 48, and Polymarket has Kamala at 50, Trump 49. Interesting. Yeah, that debate really shifted the betting markets, which, you know, were substantially more, or at least, I mean, Trump was in the lead by a lot, 5.5 on Polymarket, and only down 1 on Predict It. That's all flip-flop now. Flip-flopping data. Oopsies. An alternative look at the Trump-Harris debate in 5 charts. Okay. Number of words spoken. Interesting. Total number of words spoken. Number of distinct words spoken. That's very interesting. So, Kamala Harris had, what is that? Maybe 6,000 words to Trump's 8,500? Which means she spoke 30% less, but had maybe, 10% more distinct words? That's interesting. Interesting. All right. He spoke a total of 42 minutes versus Harris's 37. 190 words per minute versus her 160. Interesting. He also took more turns, jumping in so often that he spoke 54 times to her 29. Wow. because he so frequently repeats himself. This is related to Trump. Words by characteristic. That's actually funny. They, she, it, are, country, going. Good's a lower bar here. But, because, get. This is actually funny. Words most characteristic of Harris. Oh, okay, this is by characteristic. Okay. These are interesting. Getting mad. Median pitch. Deviation of pitch in turn of speaking. Okay. Oh, okay, so you're looking at, like, which one becomes more volatile when? I don't know how useful that is. I mean, you see some volatility there. Moderator asks about J6. I don't know how useful this is. This is some weird stuff. Like, who puts this stuff together? Let's count all the words. Let's see here. Somebody in the comments says, honestly, I'm blown away with how bad he was. He was literally the worst, in his worst light that night. I can't believe he just walked in without preparation and thought he would own the debate. Trump could have absolutely used some more prep there. Absolutely. Nvidia is doing really well right now. Look at that, up 1.5%. And the Qs are almost actually positive again. Good for the Qs. That's an Economist report. Considering his life is literally on the line, he should have prepped more. Oh, maybe because of the, you know, the hearings and the sentencing and stuff like that. Yeah, that's interesting. Overconfident. Yeah, maybe. Yeah. Hey, look, good bounce here though on the Qs. Good news for those of you that like the Qs or even Apple. Look at that. Nice movement up on Apple. Although, I mean, it's just coming up from the hole, right? I mean, it's just down 0.5%, but it's rotating up. Enphase can't catch a bid. And Bitcoin back above here. And then as you can see, Tesla's just really stuck at the 230. That's usually when you should make your dentist appointments. Always make those appointments for 230. All right. And they've never heard that joke before. But look who's on.
The ECB out this morning. They cut rates 25 basis points as expected. As far as a signal about what comes next, President Lagarde gave none. Data dependent. We are not committing. We are not pre-committing. I mean, she answered it in 5 different ways from multiple questions. She did, though, talk about some of the downside risks to the economy in Europe and to the global economy as well. Listen.
People are like, why 230, Kevin? Just listen to it. Tooth hurty.
Euro area exports, owing, for instance, to a weaker world economy, or an escalation in trade tensions between major economies, would weigh on euro area growth. Russia's unjustified war against Ukraine and the tragic conflict in the Middle East are major sources of geopolitical risk. This may result in firms and households becoming less confident about the future and global trade being disrupted.
A lot of talk about trade, Carl, which I thought is interesting because we don't get that as much from Fed Chair Powell, but it's clearly a front and center conversation in the election. And she's paying attention, clearly, to the prospect of increased tariffs and trade tensions and the spillover effect on Europe.
I mean, just thinking about the Draghi report earlier in the week and just the sort of indictment of not just innovation, but over-reliance of trade with China versus, say, for example, the United States. They've got structural issues that they're having to...
Somebody here's like, wow, you have a lot of liberal moderators not going to subscribe here. Well, you too could be a moderator if you join the courses on building your wealth. Go to meetkevin.com to learn more and take advantage of the expiring coupon code today at 6 p.m. It's a flash sale. You too can see what Kevin's up to.
Europe's problem. So that's going to continue to be a conversation.
They got to do something. I mean, when you look at the divergence in GDP.
Being a dentist, 2:30 is not the best time for an appointment. Tell us why. Tell us more. Yeah, they always seem to schedule me for like 9 or 10.
A nice nugget. In the last 50 years, the U.S. has created 6 companies now worth $1 trillion each. In that period of time, Europe has created not even a company worth $100 billion. The just creation of capital in Europe versus U.S. is incredible.
Think about all the companies we talk about every single day, the Mag 7. They really don't have any of, I mean, Spotify, I don't know. I'm thinking of other companies in Europe.
They got some big, important companies. Airbus, pretty big, important company. You know,
but they don't have any big, important AI companies.
No,
technology companies. But Brian Moynihan actually talked about it in our interview this week because he was saying he referenced it in terms of the Basel III regulation, saying we're trying to match, the European framework here of Basel. But Draghi's report just came out and showed how uncompetitive they are. Maybe they should try to be more like the U.S. in terms of capital markets and innovation.
A lot of things.
And
I covered the wireless industry for years, including from its nascent years, and the Europeans were ahead of us in all ways in terms of that. Regulation just basically drove the ability to invest out of the business, and look where they are now.
Right. No, it's a problem.
Yeah, it's a problem.
The problem is, are they going to have enough political will from their members, especially like a Germany, to spend and to do what's necessary? That remains to be seen. But we diverge because there's some fresh commentary on the economy in the U.S. that we're paying attention to today. And on the
Diverge or digress?
I know you guys have been talking about that. The engagement recovery is happening. Jenna Drosos, the CEO, says the sequential acceleration in same-store sales makes Q2 both the 5th consecutive quarter of same-store sales improvement and the largest improvement we've delivered in more than 2 years. She said Q3.
Signet. Does anybody even know what the hell that is? I don't.
Fashion, though we also saw sequential improvement in bridal and continued strength in services. Guys, it's so important for them to see engagements go up. People getting engaged. They own Zales, they own Kay, they own Jared. And I love some of the...
Okay, they own all of those. Okay, yeah, Kay, Jared, you've seen those. Okay.
Rings are up significantly in recent months, and they have this whole algorithm where they check for couples getting engaged. 26 of our proprietary engagement milestones have been met, where they're highly likely to get engaged. It's now 90 basis points higher than last year and the highest number of couples we've seen yet. Romance is in the air. Good thing, I guess, for the economy if you're in the engagement business.
Yeah, and better housing mobility will help out too.
Housing formation would be helpful.
Yeah, and then on Affirm, that's the
Sarah's got 2 cups of coffee.
You're worried about the consumer, how's the buy now, pay later space. And basically, Max Levchin also sounded a pretty positive note, the CEO, but then he also qualified it by saying our customers are in better shape, maybe, than the average consumer.
As for the latest inflation print today and where the market goes from here, let's bring in Point72 Asset Management Chief Economist Dean Mackey and CFRA Research Chief Investment Strategist Sam Stovall. Morning, guys. Good to see you both.
Morning, Carl.
Sam, let me talk with you first about, I guess you're drawing some...
Is the guy in the middle pooping?
Looking at periods after the first cut, right? It's not always roses.
Oh, that's right. Well, Carl, it's the big difference between wanting and having. That in the period between the last rate hike and the first rate cut, the S&P has gained an average of 18% going back to 1990. Yet in the 30 days after the first cut, we end up seeing the market tread water, gaining less than 0.5%. Most of the action is below the surface, however, in the sectors areas, with a lot of the leaders being in the defensive areas. But I have to include technology in there because investors don't want to be giving up on the growth.
Right. That said, you are looking for maybe a post-election rally. Am I right?
Absolutely. So typically the seasonality gets shifted during the election year. Instead of August and September being weak, it's September and October. And you look at a majority of styles, sizes, sectors, and sub-industries in negative territory in September and October. But then the reverse is true in November and December. Once the uncertainty of the election has been lifted, you find that all sizes, styles, sectors, and 97% of the sub-industries are in positive territory, led by more of the growthy areas.
Robinhood is running, by the way. It's running somewhere, but it appears to be doing well. 2-4. Yes. Okay. Sideways market though. Look at that. What weird. I mean, you got the pop on Nvidia, which is nice, but Q's sideways, basically flat. Enphase, trying to pop up a little. Tesla just can't hold the 230. And whoa, look at Palantir. 35.17. It's killing it. That's really good. Look at, let's see, small caps, 7 bips. Ethereum, 23. DocuSign's up too. Oh, okay. All right. Well, so I hear the little babies chirping out there, so I'm gonna go say hi, and then we'll go do a course member live stream. Yeah, remember Flash Sale ends today. You can see the multi-million-dollar bet and the long-term thesis on it. It's an over. It's like almost a 1.5 year bet. So go learn about that. Today's actually a good day to learn about it. Go learn about it over at meetkevin.com. And let's push the button, and we'll see you in the next one. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. There you have it. Thanks so much for being here. See you in the next one. Goodbye and good luck.